bonus episode, our story, I guess, part 6. This is the advanced strategies and how to build your investment business the right way. Let's dive into it. Hey everybody, I'm Clayton Morris.
I'm Natali Morris.
And welcome in to the Investing in Real Estate show. We are, for the very first time, if you're watching the video version of this today, we do a lot of different content. We do video and audio totally separate, but today we're doing a video version of the show in our brand new studio. This is exciting.
Very exciting, yeah.
I'm excited with the lighting setup. This is still coming together, so the lighting's not all done. In fact, our crew is going to be here later this afternoon to kind of tweak everything, the computers, but I'm super excited about it.
Did we get a key grip? Did we remember to...
What is a key grip? It's just someone that grips stuff?
I think they hold the boom.
Well, if it's someone who holds the boom and grips things, then that's me.
Okay. You're overpaid for that job.
I just grip stuff and hold lights.
Okay, good.
So no, we don't have that, but I'm really excited about the new studio. So we're going to be doing a ton of great content from the studio, live streams. We've got the 4K setup, so live video streaming. We're going to be doing Q&A sessions around real estate, wealth building, tax strategy, all of those things. We're going to have great guests here on the show. We'll have some of our tax guests, our legal guests. So if you're new to the show, that's what we talk about. We talk about real estate. We talk about passive income, buy and hold real estate for the purposes of creating cash flow every month. And this is kind of a bonus episode. What were the first 5 parts of this?
So we started the year by taking you through our journey where we came from no money and some hard times, and how we built it all the way until the present time where we were able to stick it to the man, quit our day jobs, and now we are full-time real estate investors. And so we wanted you to understand how we built what we built and how we learned what we know. And we sort of ended last week with the and then we're done. We have now about 50 doors. We own them. Life is great. But it's not that easy. And so we'd been talking about sort of, not just how we got there, but then what it takes to thrive once you get there. Because I can imagine plenty of people would, if they had this amount of investment real estate, it would drown them, right?
Drown them? Yeah, I think so. I mean, because a lot of people say it's passive income, right? So the monthly income cash flow is passive, but there is work.
Yeah.
You don't just sit back sipping, like drinks out of a coconut. You've got to put some legwork into making sure that your systems are right, that your legal structures are proper, that your trust is proper for your family. What happens if you have an eviction on your property? Right now we have 2 New Jersey properties that have evictions. The holidays are difficult for people, and we had 2 tenants no pay during the holidays. And so the property management company is working with those tenants to get them caught up. If they don't get caught up, then they're going to be evicted. So what lawyer do you hire? Do you need to hire a lawyer? Are you in a state that you need to have these things?
Exactly right. So originally we began investing in our own names. We just invested as sole proprietors. And excuse me, the first few properties that we owned were owned actually just in Clayton Morris, the dude.
That's me.
Right. It didn't say the dude on the deed. It's not the Big Lebowski. But I
just wear a robe and drink White Russians.
The dude abides.
Is that what he drinks, White Russians?
I think so.
Yeah.
Let me tell you something about the dude. I've distracted myself with this movie reference.
So when we first purchased properties, we just purchased them. We didn't know any better. We bought them in our own name as sole proprietors.
And so the goal was to continue to do so because those checks were coming in and we put it in our own personal checking account and then used that money to pay our mortgage. And that was great because it was easy to access the money. But what we weren't doing was taking full advantage of the tax code the way it's written, because the tax code does, in fact, encourage entrepreneurship. And we weren't taking advantage of all other kinds of ways that you can own depreciation. We just didn't have the right team in place for that, because our accountant before he specialized in media personalities. He was a broadcast guy. A lot of his clients were on Access Hollywood or other, network news reporters. So what he was good at was helping freelancers. Or people who had sort of, media type jobs. So he understood that I could write off my makeup. But when it came to investment real estate, he wasn't actually all that knowledgeable. And he even said to us, don't buy your real estate in all of these different LLCs because then I'll have to file a different tax return for every LLC. Well, that wasn't all that great advice because it expanded our exposure, right? If we owned all 50 doors in one LLC and then we did someone wrong on one of our properties, like we were negligent, they asked us to fix something and we didn't, and they fell and got hurt, and it went beyond the scope of our insurance policy.
And the property management agreement, like the property management agreement should pretty much protects you as an owner. But that's one level of protection. And then you've got insurance. That's the next level of protection.
Yeah.
It went beyond that, then they'd come after your own personal worth.
We're assuming that we've done something really dumb. We try not to, but let's assume that we have done something wrong by way of our tenant, right? And then that person could come after us for the amount of our properties. If we own them as sole proprietors, they could come after us all the way down to our kids' college savings plans, even. But because we own them in the LLC, then we were exposed with everything that was inside the LLC. So Clayton one day was walking, as he is wont to do, and listening to a podcast, as he usually does. It's funny, our neighbors are like, I saw your husband walking with his earbuds in. If you live in our neighborhood, you've seen that many a time.
That's how I stay so svelte.
Right, exactly. Yeah. And he came back and he's like, you got to listen to this guy, Tom Wheelwright. He was talking about the tax code and how real estate really favors, the tax code favors real estate investors if they do things right. And I listened to the episode and I was like, this guy's onto something. I just really liked him. And I read his book. And
now we become friends.
Right. Well, I think I reached out to him after that, right? Mm-hmm. How did that happen? This actually has happened to us a lot in our lives, is that we read someone's book and then we go and find them and we're like, I love what you've done. We're friends now. I can think of many people. Susan Lassiter-Lyons, Robert Kiyosaki.
Right. I'm Robert Sheeman, who's one of my mentors in real estate.
Laura Lynn Jackson.
Well, and
Russell Wild. Yeah. So.
And we're fortunate because we've got a lot of people who've read our book on how to pay off your mortgage in 5 years.
But why don't people want to be our friends like that?
They do. Okay. I don't know. No, they have reached out to us. You're very, very kind when you send us notes about having read the book. So that's very kind of you. So there's a natural, you're spending that amount of time going through someone's brain in a way. And so we spent that amount of time going through Tom Wheelwright's brain, listening to him on shows, reading his book. And, one of the things he talks about is, if you're a real estate investor, you should not be paying taxes. You should not own properties as a sole proprietor. The tax code is written to benefit you as a real estate investor. And guess what? Now it's 2018. We just saw the new tax code go into effect. It's even better than when Tom originally wrote his first book, Tax-Free Wealth. He has a new version of the book coming out, which addresses these changes in the tax code. So if you're not taking advantage of the tax code as a business owner who owns real estate, you're missing out big time. You're making a huge mistake.
Now, so often I have people who write to me through my own website and they say this: I understand what you're saying about how the tax code favors real estate investors, but my accountant says that I can't write this off because of this, right? And Tom's whole strategy is that if you don't have a person who understands the ins and outs of how the code favors real estate specifically, you've got the wrong person. Now, we've talked a couple episodes ago, I want to say this is 3 or 4 months ago, about passive loss and whether or not that affects you, right? Clearly, your accountant will know that. But there are so many ways to use the tax code to your advantage, and you have to have someone who really understands it. And so basically what I did was I read the book and I took it to our guy and I'm like, can you explain these things? And I showed him passages. I sat in his office and he was like, no, I don't have time to read that.
And one of the things that Tom says in his book is, take some of these things to your accountant. And if they are willing to read it, go through it, then okay, maybe this accountant is salvageable. But if they're literally too busy to read ways in which they can save their clients money using the tax code to their advantage in real estate, you got to kick them to the curb. I mean, you're just not doing yourself a service by wasting money on an accountant like that. Look, and I know people want to save money. I know when you work with someone like Tom at Provision or some of the other accounting firms that are out there, sometimes, they're going to charge a few $1,000s up front to get a consultation and work with them. So you are paying for what you get.
Yeah.
It's like hiring a person, right? Like, hiring additional people on your team. You could be cheap about it. Or when someone comes to you and says, hey, I've been working hard, I think I really deserve this raise, and look at it and say, yes, you know what? You do deserve that raise. You do deserve the extra money that I'm going to pay you. You pay for what you get. And when you try to cheap out, it comes back.
Yes, that's absolutely true. And Tom makes the point that you upgrade everything in your life as you become more successful. You don't drive the same car. You probably don't wear the same clothes. You probably,
I'm wearing the same T-shirt that I've had for a few years. Can you tell?
I don't think that's true. That's one of your Bombfell shirts.
Oh, well, I don't know.
That's one of your designs. Don't pretend.
I think it's an old, I've had it for a few years, but.
Anyway.
I'm not exactly the modicum of fashion.
Right. Well.
Yeah.
No comment there. You keep distracting me. Stay focused, Natalie. So anyway, his point was that you should also upgrade your experts. And in my experience, that is really, really important because there's been so many things that I've tried to figure out on my own, and I can't get there. Even when you are setting up your own LLCs and you want your LLC to report to another LLC, I'm not even completely sure how to do that on the website of any given state, and I'm not sure that I've clicked the right thing. I don't understand the questions they're asking me. And so I understand where I want to go, and then I cannot execute on most of these things. Like something we learned last year was called captive insurance. We will have a whole episode about that. I understand what it means. I understand where I want to go, but I can't institute that. No way, no how. So you need to make sure that you have experts who can do those things for you. Now, we called up Tom as soon as I finished the book, and I would read the book and I'd go, Clayton, this, that, and the other, how come we didn't do that? And he was like, yeah. So I called them up. And they gave us this quote of how much it would cost to start to do our estate planning and plan out our investments and all of that stuff. And we couldn't afford it that year. So I wrote it in my journal, and it remained there for 9 months.
Your vision board, really.
It was in my vision board. It was like, at the end of the year, we are going to afford to employ provision.
What's amazing is that you had that in your vision board and a couple of other things, right? And I had a couple of things in my vision board and journal for the year, things that I wanted to accomplish around passive income. And that year, we both hit our goals. We kind of got together towards the end of the year near New Year's, and we're like, oh my God, we acquired this number of properties.
Yeah.
And you said, guess what? We were able to hire provision.
Right.
We were able to do this in order to, set us on the right course financially and with our accounting team so that we're making the right decisions.
Right.
It was pretty amazing.
That was great. So what they did was they were able to look at everything that we owned and sort of pair it with what we were making with our day jobs and our side jobs and all our side hustle. And they were able to say, okay, it was kind of crazy because we had one LLC that owned like 12 real estate investments, and that LLC also was our freelance broadcast jobs went through there, and also
speaking engagements,
right. The speed reading app. Like, it was just an LLC full of it was like the kitchen
drawer.
Sink. Yeah, it was like a junk drawer LLC. Because our accountant didn't understand the nuances of these different types of businesses, and he only wanted to file one tax return, and we were like, okay, fine. And so they gave us a plan. They gave us what's called a structure diagram, and they were like, these houses have to be owned by this LLC, which is then owned by this LLC. And they said, you have to talk to an estate planning lawyer to execute on all of this. And so they actually didn't open all of those. They sent us over to York, Howell, and Goyman is the law firm that we use. And I mean, really, any law firm that focuses on an estate planning works would be fine. But again, I found Andrew Howell, and I read his book called Entrusted, about how to pass down not only your wealth but your wealth and knowledge and your values as a family. And I was like, okay, this guy, we're aligned. So we became friends, and we started working together because of their book. And
the book is great. Again, she read it. Now, I read a lot of books, but when it gets into some of this tax codey stuff, like she dives into that stuff, and I'm just like, my eyes glaze over. We know what our strengths are. And so we would be driving, and she was telling me about these things in this book. She said, for an estate planning book, this is incredibly well written. And his vision for family and how money is transferred is incredible. And the ideas in that I don't think a lot of people even think about. I know we didn't think about it. That, okay, that's fine. You've got a bunch of siblings. You've got extended family, mother, father, sister, all scattered around the country. who then is responsible for the wealth and who's then responsible for the social side of your family if, God forbid, something should happen, right? Mm-hmm. Is there someone in your family who's savvier with money? Perhaps that is the person that should be in charge then of distributing the wealth in your family. Is there someone who's better with children? Maybe that person should. So it was a lot of thought about how to structure your trust to protect yourself, to make sure that people, at what age do you want your kids to have access to their wealth?
To their trust fund, how to set up a trust fund. Right.
And if you think about a trust fund, it sounds like, oh, trust fund, baby. But look, if you've got one rental property, that should be in a trust. If you've got two rental, so this idea of a trust fund is like Richie Rich or something, or
right.
Daddy Warbucks. That's not what we're talking about here. We're talking about those assets that you've purchased, those cash flowing, passive income performing assets, those should be in a trust. And yes, they should go to your trust fund, baby. I mean, that's the bottom line.
Right. And so, my mother, she has worked in escrow and title for over 40 years. She's retiring this year. I'm so proud of her. But she has dealt with so many times when a property is owned by a sole proprietor and that person dies, and the property then goes to probate because it wasn't in a trust. And it's really, really hard for the heirs to get it out of probate because it's like, you sort of buried some treasure and then you send out some bureaucrats to find it with shovels. Like that's, no way for them to really get your assets to where you intend them to go.
Do you want a judge handling where this asset goes, or do you want members of your family that you know, like, and trust to be able to dole out, okay, these 5 properties are going to these children, this money is going to this child? Or do you want it handled by a judge who doesn't know your family at all and is just going to look at it as a line item thing on a piece of paper? I've done a lot of properties in the state of New Jersey, and hundreds of properties that have sat, and when we know that they're in probate, it kind of puts the brakes on it. It's like screeching halt, because it could just be locked up by these bureaucrats for years even.
Yeah.
Especially if you've got all these family members that aren't getting along. And remember that one house that I had in East Orange, New Jersey?
Oh, with the 9 kids?
Well, that was one. That was another one. But I was thinking about this one where, like, the one brother, they like hated the other brother. He couldn't even get a hold of him. And they were trying to, like, sell this house, and I was trying to buy it and, like, going to do the renovations with the team. And they didn't even know that there were all these back taxes on it, and they couldn't get a hold of each other. And I was like, look, Daryl, you've got to talk to your brother. He's like, I know it's going to be hard. I got to call him.
Yeah, I remember that.
That's why it was stuck in probate.
But, this type of planning is not really planning for your death. It's planning for your life, because it talks about how you communicate this wealth to your children and your surrounding family, and how you then help them to they talk a lot about the spark and the flame, right? Because what we've got now is the flame. It's the money that's resulted in the spark, right? But you can't really pass down flame. That dies. Your kids have their own spark, and you want to allow them to feel safe enough for that to become its own flame, right? So you don't want to pass down, you don't want to give them enough to do nothing. What's the quote? Give your kids enough to do something, but not enough to do nothing. I think that's Bill Gates. Is it Bill Gates or Warren Buffett? It's one of those two.
I don't know. Bill Bradley? Bill Clinton? I have no idea.
Who's Bill Bradley?
He was a senator, famous basketball player.
Okay. I don't think he said that because I don't know who he is.
Well, I know Bill Clinton, one of his famous statements about, the welfare to work program, the whole thing was, give people a hand, don't give people a handout, give them a helping hand. Help them up. Give them enough to get started, but you're not just handing money out to your kids where they have no frame of reference. They don't go out and work on their own. Mm-hmm. I want my kids to work hard. Because
kids find money really confusing. Like the other day, my son asked me, how does a credit card work? Like he thought you could just swipe this credit card and have things. And his friend in the back, Atticus, was like, you have to pay the money on the credit card later. And Miles was like, no, you don't. It's like, you absolutely do. You can't just use the credit card and get things.
Wow.
He was like, Mommy, how does that work? So to him,
are we failing our kids?
I'm a magician. Well, he understands like bank accounts and dollars. He's just learning to count money. He's 7. But he didn't understand that the idea of credit made no sense to them. Like child psychologists often say that adults can do all these things that children don't understand. So much of it is like magic. So they don't know, how like your reference point is off. So he's like, oh, my mom just, I don't know, maybe he thought like I had a stronger credit card than other people, that I could buy things. I don't understand.
It's a magical Harry Potter credit card.
Right.
Yeah.
And so too often we fail them by not understanding that, not explaining these things. They don't know like why we have things that other people don't have, or why other people don't have these things, or it's confusing to them. And this book helps a lot to make sure that you're clear about what your wealth is from in your family, because no, wealth doesn't come from, I'm not going to finish that. I went a different direction.
Well,
you go ahead.
Thank you for taking us down that.
That was a strong point I just made.
Thank you for taking us down that cul-de-sac.
I wanted to say that like dumb people aren't wealthy, but that's certainly not true. There are plenty of dumb people that are wealthy. That's
true. Do they hold on to wealth though? Are they to create generational wealth?
I don't know. I don't want to.
No, but that's the point, right? You might come into
say
money.
Wealth as in like wealth as an all-encompassing, like you're wealthy in knowledge,
right?
Not
But
just
dumb people do come into money and then they lose it quickly, right? So without financial IQ, without financial education, then of course they lose it quickly. They don't have the things in place that we're talking about here. They don't have the proper legal experts in place for estate planning. All right. So let's go through these again and see if we missed anything. So if we think about one of the first things we knew that we were failing at once we had accumulated a number of properties was we got to get these in the right entities, the business entities, right? Okay, once we get them in the right business entities, we're not really utilizing the tax code the way that we know that we can, which is where a really smart CPA and a tax team comes into place, right?
Right.
So that was our next strategy, which is how are we going to start saving all this money? We know we shouldn't be paying taxes as a real estate investor. How do we offset the other income that we had coming in from other places? Then, okay, once we understood our sort of structure for our entities, now we had to go and build them, which was then we needed the right lawyers to build them properly.
Yeah.
You can try to go and do it through websites. You can use things like LegalZoom and that other stuff. That's fine for setting up sort of individual LLCs. But when you want to start putting on place like a holding company that's talking to that LLC correctly, they need to be reporting to each other correctly.
Right.
As a passive and one as an active. So you've got to do them correctly. Otherwise, you're going to get dinged come tax time and the IRS comes knocking.
Is it a C Corp or an S Corp, or is it a C Corp taxed as an S Corp? I have to be honest with you, I'm not even completely sure which ones are which in our...
But again, this is why you should hire people, right? This is why you can't do it all yourself. You're not an island, so don't try to do it all of yourself. We realized that we around the new year, we were so thankful. We got calls from Provision, our accounting team, with the changes that were coming from the tax code. They were calling us, letting us know that these changes are coming, do this instead of that. And we just looked at each other over dinner. We're like, my God, thank God we have smart people around us that can help us take things to the next level.
And our guy at Provision that actually works with us is not Tom Wheelwright. He doesn't really work in the trenches all that much anymore for clients.
And for obvious reasons, it's not scalable to have one person.
Right.
No,
he's the visionary. He's the guy who's reading the tax code and coming up with strategies overall, but he doesn't actually work one-on-one with people as much anymore. Unless something big happens, and then our guy's like, I'm going to bring Tom in on this, and Tom makes the decision.
Right.
So he's still the big guns. But our guy there will sometimes call us, and he braces for it. Like, he'll give me this, like, Natalie, you got to do this. And, and I'm like, okay, thanks goodness for you. And I can hear him go, whoosh. He thought that I was going to yell at him. But, like, yeah, these things are hard that he asks me to do. He's always asking me to learn a new skill that's hard to implement. But I'm grateful for it.
It's a challenge. You don't grow unless you have these challenges.
Right. We have him that's why we hired them for these. So like we said, this captive insurance or the accelerated depreciation, which we have a whole episode on. What is it called?
What? Cost segregation.
Cost segregation. Thank you. Not captive segregation. Right. So these are really advanced tricks that we're using now because we have a large portfolio, and these are things that expert real estate investors are using all the time. But now it's time for us to do that too because we have a big enough portfolio.
Right. So hopefully you found this little bonus episode useful. If you're not already a subscriber to the channel, please subscribe, share it with any loved ones that you know might benefit from building wealth. You've got that brother, that uncle who's just always kind of sitting on the couch playing Xbox, and you're like, God, I wish Uncle Jim would get off his butt and learn something and take action, build some wealth in his life. We all have those people in our lives, don't we? So go out there, share this podcast with other people. It would mean the world to us, and I'm sure it would mean the world to those loved ones. We'd love all of your comments when you leave your comments. Thank you so much for getting in on this dialogue. We're super excited for the studio. We're going to be doing a ton of great shows here live. So we're going to be doing a lot more live shows that we can interact and jump in the comments stream and have discussions, things that are tripping you up about real estate investing and wealth building, things that you just can't really wrap your head around. We get tons of emails with those questions. So I'm sure that there's many more of you who have that like one sticking point question that you need answers to, right?
I suppose so.
Yeah, that you absolutely do, because we see those emails. Much love to you all. We'll see you back here on the next episode of the Investing in Real Estate show. Now go out there, take action, and nudge Uncle Jimmy off the couch to become a real estate investor. We'll see you next time, everyone. Okay, three.
I bet you missed your news crew now.
Yeah, I do.
You have to do everything yourself.
I do.
Hey, Dave, floor manager. Oh, wait, that's you.
Yeah.